All right. All right. Let's go. Let's go. Let us start this lovely session. Let me just double check something. I just want to make sure that you guys can hear me. All right. Perfect. 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 So if you guys can hear me, if you guys can see my screen, do me a favor and type a 111 in the chat. A 111 in the chat. I know we got some people on with Facebook. I know we got some people on YouTube. So what I want to do tonight is first let me just drop the link to the Facebook group just so everybody can join in. Then we'll get this party started. Bada boom, bada boom, bada boom. All right, all right, all right. All right, let's get this party started. All right, so without further ado, I know we're gonna have some people come in on Facebook, but if you guys can, perfect, type that 111, appreciate it. All right, so what we're gonna do today is I want to talk straight up, and I want to talk technicals, right? And I just want to go real straight deep into it and show you guys the ins and outs of some of the basic things you should be doing to enhance your trading experience, right? Whether if your goal is to see more consistency, see more profitability, getting funded, we want to make sure that we're following very basic technical rules in the market, right? So today, what I want to do is I'm just going to bring up some topics, and I want to know based off of the people who are with us today, which one of them you want me to go deeper into, right? So the first one we could talk about is analyzing the trend, right? Trend analysis, right? I want to definitely see if we could talk about something we call Fibonacci, right? Or we could talk about putting together a trading game plan that works for you. Let's see, what else can we talk about on a technical Thursdays? We could talk about the trend, we could talk about fibs, we can talk about, let's see, candles, the power of specific Japanese and Hikanashi and all this good stuff. Let's see if there's anything in specific that you guys want to discuss. Definitely let me know. Let's see. We got putting together. Yeah, we got putting together our game plan. We could talk basic fibs, trends, candlesticks. We could talk about the Enigma trading system that everybody has access to. That's a technical tool, right? We could talk about our pullback pips indicator, right? Any other systems that you're using. So let's keep it simple as that, right? We got 6 great topics that we can discuss today. And based off of everybody who is on this call, which one of these grabs your attention the most, right? I just want you to drop that in the comments. You want to talk about truly understanding the trend and analyzing the trend in the market. You want to discuss the power of Fibonacci. You want to discuss putting together a trading game plan that works for you. You want to talk about Japanese candlesticks and the power of why it's important to understand the body, the wick, the open, right? And how the market truly identifies these points. Do you want to discuss our amazing Enigma trading system that's already identifying institutional setups for you on TradingView? Or do you want to talk about our pullback pips indicator where we'll be able to do more of a manual trading when you are able to see what structure and the trend can do for you, right? Just drop it in the comments. Perfect, perfect. Let's talk about trends. So what I want you guys to understand is we got trends. Let's actually let's talk about trends. So no matter which currency pair you're looking at, you always hear the term the trend is your friend. But you need to understand and just be real honest about the true facts of what this industry brings, right? Less than 5% of traders are seeing consistency, are seeing profitability. So what happens is that it's not just being able to identify the trend, but truly moving to the next step from that, right? So before we move into, anything a little bit more intermediate advanced, I want to just talk about the basics when it comes to being able to identify the trend in the market. Right now, everybody should be familiar that there's three directions that the market moves in. The first one is that the market likes to move up, right? Now, of course, everybody would love for the market just to move straight up from when you get in, but no, the market likes to pull back, it likes to go up, it likes to pull back, right? The next type of market that you tend to see is when the market's just not moving anywhere. Sometimes it's just moving sideways, right? We call that consolidation. You get choppy markets, you don't understand why it's not just taking off, right? And then there's moments that when we're trading, we might notice that the market's starting to fall, right? And that's something we call a downtrend. Now, to keep it real basic, when you're looking at the markets, there's only two specific times that you want to be trading. We have our uptrend and our downtrend, because we want to avoid clearly when the market's moving sideways and it's not moving anywhere. Hopefully that makes sense, right? Awesome, awesome, awesome. Well, we'll probably move into some more sauce, right? So no matter the currency pair, this happens with every market, whether if it's Forex, indices, metals, right? You can literally bring up any currency pair and you'll notice here, let me just grab gold. Let's bring it up on the 30-minute. Let's take off our drawings and boom, right? As this market is moving up or moving down, you're starting to notice that it goes up, down, up, down, up, down, up, down, right? Might move a little sideways, but then once it starts to kick up, it starts to move, right? So the first thing you need to understand is that traders, this is something that really hurts, but traders react on emotion, right? And this is why you always want to be emotionless. You need to just be systematic to your approach, right? So what tends to happen is when the market goes up, it's weird, but when the market's at these high points, for some reason, traders feel comfortable to get in. It makes no sense. It's like, let's just a very basic example. Bitcoin's going up. It hits the all-time high, and next thing you know, people want to buy in, right? Gold literally goes from 1786 all the way up into 1820, and people say, oh, it's going to keep going up to 1900. No, you see, what happens is if you understand that the market goes up and it goes down, you understand that it's going to pull back or it's going to retrace. But one thing I always want you to understand is when you're looking at a market, I want you to notice that there's specific points, areas of interest that are really nice to see, because as this market is going up, you're starting to notice that it's not actually breaking lower, right? So this pullback is just simply the opportunity to trap all these traders to then get that motion back in, right? Now, when it comes to your trend, the first thing you need to be able to understand is the type of market that you're trading in, right? You could be on your 15-minute, your 30-minute time frame, but here, like this example right here, this was actually one of the setups that we talked about on Sunday, where we discussed that based on the market. Here, let's just go back. Let's go to the 1 hour real quick, just so you guys can see. You don't always want to buy You don't always want to buy at the top and think it's gonna. No, 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 no. First thing you always got to ask yourself is, what trend am I in? Right? Forget about the consolidation, the choppiness. Overall, when you start looking at that market and you're identifying it's going up, it's going down. The next thing you always got to ask yourself is, as it's going higher, these low points that were created, what's happening here? Right? So, like, for example, as this market decides to go higher and it's pulling back, is it breaking these low points? No. Right? And it's okay if it takes you some time to start to realize it, but eventually what you're noticing is that the market's what? Going up. It's breaking higher, right? As it's pulling back, is it breaking lower? No, it actually is going higher, right? So these are opportunities that one would say, hey, if you know that you're buying the market, you need to get in, right, at the lowest, the best point possible, right? And that's what we call AKA a pullback. So like for GN, that's why we're looking and trying to accommodate the nice buys on this bad boy, because we already saw that what? These low points are gradually going up. These high points are gradually going up. So now it's just a matter of taking it level to level, structure to structure, you know, and doing your thing. Real basic stuff. But I want to jump in and we can grab any currency pair. You can grab EA, right? This is a good example because we were looking for sells. I didn't trade EA much, but it really showed me that if you're able to identify what trend the market's in, right? You can see right here. This is the opportunity now where if you know that the market's breaking these areas, right? And you know that you're trending, you're pushing to the downside. This does the opportunity where when the market pulls back, right? The pullback is when you're looking to enter. So as it goes down, realize, guess what? That was the move. What needs to happen after the market always creates a move? It needs to pull back, go low, pull back, go low, right? A lot of people always want it to be a W or a M, but you just got to go with the trend, right? And even if you get pulled back and stopped out and the market decides to continue going on lower, just do the same thing. Find the pullback, identify the high, and take it lower, right? So we know that we're dealing with three type of market conditions, right? We're looking at our uptrend, our downtrend, and this is another example. Now I didn't tap into this EG, but sheesh, it actually did. Let's look at it. Let's look at it. And you tell me, what would you have done? Would you have taken your loss and walked away, or continued looking at this pair and finding a better opportunity, right? So earlier in the week, we already identified, we had our pullback pips indicator, right? Enigma, I think, had a setup as well on EG. So it was just a nice bearish play overall. But let's just do a quick playback. All right, all right, 26, 27. We're kicking in. We got our structure, right? So we're looking for this bad boy to give us some pushes to the downside. Let me see if we can bring out Enigma to the party. All right, so we had these setups that already came out. Boom, great. What was next? Now, if you already look at this market, what do you start to see? It's in a downtrend, right? So all of these opportunities were great, but the best part is, as this market is going lower, you always got to ask yourself, what's happening at these high points, right? These are the opportunities where if the market wants to continue going low, as long as it doesn't break higher, you're confirming that trend, right? So the first key thing you need to do is first know the trend, but then the second thing you need to know is, hey, when am I actually trading this pair, right? If you go to our handy dandy breakdown, we already know that each currency is a specific time to trade, right? If you trade gold, it'll be at a specific time. If you trade indices, you'll trade at a specific time. If you trade a specific currency, you know that there's the New York session, the Asian session, the Sydney session. So if we're going to trade euro or the GBP, then best believe I'll start looking at my setups anywhere from 2 a.m. up until mid New York, right? So that's all part of the system where if you know the trend, if you know when the market's going to make the move, you see right here what time it is? This is 2 a.m. So when the market gave us this setup, no wonder it just decided to take off. It was at the right time, the right place, right? So coming into this session, 2 o'clock is actually going to be right around here, but let's just see what it decides to do. It decides to give us a nice little pullback and then do what? Go down, because now you already know right here is what? 2 a.m. We got the flow, right? These are all things where you're not just trading it just to trade. You're trading it at the time for it to be traded, so you can maximize it and make these bad boys do their thing, right? So just looking at this setup, it looks like we actually got some nice plays off of EG, right? And this is actually after, right? We had our session. These plays were just after it. So these were actually some good technical plays. Push them bad boys to the downside, right? My question I always ask myself is, as this market is creating new lows, right? Look at this. You see right here, it created that new low. What's happening to these high points? They're gradually doing what? They're gradually going down. So as the market is breaking even lower, this is where it gets powerful. All of this area, right, that was once supporting it is now just going to be that rejection where you could have easily taken those pushes to the downside, right? So that was EG, and that was some good sauce. I know I didn't mention talking about the pullback or Enigma, but it all comes together, right? Being able to identify the trend in the market, then being able to make a move from that trend in the market, right? So let's come over here. Let's grab, we could talk about any currency pair. Look at EJ. This is beautiful. If you were on the call, I remember we were talking about bullish EJ moves, right? And just to keep it real simple, let's come over here. On the 2, you're seeing green. Bada boom, bada bing, right? I think we're on over here. This was the time we were looking at EJ right in here, right? But I want you to notice something. When you're looking at the market, the first thing you ask yourself is, hey, what trend am I in? I'm doing this on the 30-minute, the 15, the hour. I just want to see, where is the market really moving? And the good thing is, with your pullback pips indicator, you see the structure points. So I don't know if you see what I see, but here, let's do a quick replay right here. If the market's at this point right here, right? And you know that it's doing what? It's pulling back, it's going higher. These low points are doing what? Gradually going higher. You know that easily you can now look to not only push this market up, but take it into these structure levels, right? As it decides to make it move. You understand another thing. If you're buying this market, you see these points right here of structure. These are the points you want to buy it at, right? These low points, right? You don't want to buy when it's already up at this high point. You would buy it at these low points to take it up, right? So as that market decides to make those breaks, I want you to notice what it did. It broke, and look at how it retested that structure level to go higher. That's the power in identifying when the market breaks, because now you can find those for the potential retest and push that market on up, right? If it decides to go higher, even better on itself, right? But you already know a few things. When you're looking at this chart, you know that the market, look at these high points, right? Look at these points right here. You see these? Did the market ever break lower? No, right? Did the market ever break lower? No. In fact, the market's actually going higher. So that doesn't tell me, hey, I'm going to run away and get out this trade. No, it's telling me that this area, as long as your stop loss is protected, you could push this bad boy on up, right? If you didn't secure, let's say, your 40 pips that it did about 50 pips on the first move, right? If you didn't secure that and you were just still holding that trade setup, you'd be pushing it into new highs. What do you think it's next that it's going to do? After it created the new high, the next thing it might do is what? Pull back and maybe want to go higher. All right? You see how it just did that little pullback? Now it's just chilling. But this is just to show you that the first thing you're always looking at is what is the trend. If you don't know the trend, you don't know the bias, right? And if you're in a bullish market, let's give you some examples. If you're in a bullish market right? This is actually a good example. But what you're looking for is, if you want to buy the market, right? If you're looking to buy this bad boy, you're seeing that the trend is what? Powerful to the upside. It's so easy when you're doing this on the 30, the hour, right? But when you're starting to see that you're in a trending market, right? The only next thing you do is you gotta buy it at these broken areas that were once rejection. So now they're supported, right? All of this that's rejection, this is where you are buying the market. So it's that opportunity for you to take it higher. Forget about buying at the highest point. You know, if we're entering at these lower points, by the time it actually reaches up there, that's already, look, 100 pips. I'm out of that market, right? Because I kept it minimal. R makes sense. And if we bring our pullback pips indicator, look at that. We're bullish. So we're only looking for the buys, right? This entry right here, X marks the spot, would have been a perfect entry, right? When we're talking about the trend, where is it that we want to get in on? And look, we actually did get some nice Enigma setups. But when we're in a trending market and we're looking to buy, we're gonna buy it at areas first off. When we break all of that rejection, we just talked about it, resistance is gonna turn to support. So if you're able to get in at those opportunities and maximize that run, that's exactly what we're looking for, right? And as you can see, we're just jumping from chart to chart. If there's any specific chart you want to look at tonight, we can definitely look at that as well. Can we please look at sweeps on US 30? All right, so let's move on to US 30. The first thing I want you guys to understand and know that is every currency pair has a specific characteristic, right? And every currency pair has a specific interest, right? If you notice, we're not trading the same pairs at the same time. There's always a time that we're in the market. There's always a time that we're out of the market. So when it comes to US 30, you got to understand some of the characteristics this pair likes to do, right? And one of them is of something we call very common as a sweep, or something that the market likes to take out before making its move, right? Now, just to give you an example, right? This right here was the first right here on the 26th, 27th. That was our buy. But I was literally talking to a buddy of mine's. But that was the first time, right? And I'm gonna just show you the most basic thing that we were talking about. Here, let's keep it real basic, right? What type of market are we in? We're in a what? Bullish market. So as this market, I want you to notice and specifically understand one thing. Hey, Anthony, if I'm trading US 30, US 30 is at a specific time. So I want to make sure that I'm understanding what's happening as it leads up to that time. You see, this right here is something very basic. It's called when resistance is broken, it turns into support, right? Remember those very basic things, right? Where a market is rejecting, and it eventually comes to that time, you'll be able to get into it in a specific time frame, the 15-minute. Look at this. It broke through, and now these are the opportunities you take it on up, right? Now, as you're looking at this chart, I want you to also understand a few things. US 30 understands, and it's crazy, the psychology of the human, right? Because this is what ends up happening, right? When people see that the market's going up, they want to get in. And then US 30, like the way it moves, it's easily going to move easy 100 points against you. That's 1,000 pips. People get emotional to that, but what you don't really understand is, look, it's just coming back, right? If it broke that rejection, guess what? It's going to turn into a supportive area, right? And if you know what that is, right? And let's actually, I don't know if it allows us to, I think we can do that. Let me see. Oh, I've never done that before. I don't like that feature. Let's go back to normal. Right? So let's come over here to the 5 minute. These were some nice plays that we had earlier this week, but this was a perfect example, right? if you are looking at this market, all of this is what? Rejection. The market breaks through that rejection, pulls back to go up, right? Now, I want you to think about something, because if you're in this market right here, right? You got in right here at this point, this pullback, it was great. You're in this market, you're trying to push it up. It's easily moved, what, 50, 60 points, boom. It's not a bad setup. But what you got to realize is people are taught to place their stop losses at the most recent low. And this is what the problem is, because even some students will come in and they'll get in this trade setup. They'll be up 50 points, 60 points. They had a good what? A good stop loss under all of that mess. This right here, if you notice, is already a nice 2.5 in on a one setup. It's not bad, 66 points. But rather than taking your profits, guess what they do? They move their trade to a stop loss, right, to break even. They move that stop loss to break even. But you gotta remember one thing: the market just went higher. It's only gonna make sense now for it to what? Pull back before wanting to go high, right? So we call it a sweep, because what the market's going to do is, when it's time for it to be making a move, it's going to sweep these players, right? So let's just say the market does decide to go up, but remember, these low points are those points where the traders are coming in and they're saying, hey, I'm up 87 points. Let me have these areas for my stop loss. Fast forward, I just want you to show you what happens. The market decides to what? Pull back, right? And this is what sucks, because it's like, man, you could have came in, secured your 90 points and been done for the day. But now, because you decided to, instead of securing the bag, you decided to make it a risk-free trade setup. Look, the market actually came down and swept, right? And this happens a lot right before our New York session. But what you're going to notice is when you see that sweep, you see it clear, crystal as day. But guess what? If you were in a trending market, let me just show you what a trending market looks like. The most recent low points are actually down here. So this pullback is always necessary. That's why people get emotional. Oh, man. But if you're able to identify that, you know that this is what? Always your entry to get in on, minimize your risk, and now take it higher, right? Boom. And that is how you're able to take over some of these pairs, especially when they're moving, right? Hundreds of points, right? If you would have gotten in on that US 30, especially at that US 30 time, you know what I'm talking about. Best believe, look at that. You could have came in on that, not only seen that sweep, but here, for those people who don't know, we're going to be launching a US 30 high ticket course very soon for those who really want to take their trading experience to the next level. But look what happened. The market came in, it swept, and guess what? We actually should have entered right there because we were knowledgeable. But for those people who have the US 30 indicator, best believe we'll be able to take that bad boy up. And if you notice, just off of the first entry, that bad boy went for 120 points. Boom. Off of the next entry, that boy did easily 50 points. So this is why it's important. When you know that what trend you're in, when you already know the type of move the market's getting in on, first off, you can be as mental to get in and already catch a 200-point move, or you could just be very systematic and have systems that still got the sauce so you could catch moves, right? So that's the power behind the sweep and using it to your advantage, because once you know the market just came in and took out all of those players, they're upset. They're upset because first off, they could have gotten in, right? They could have maximized on their 90 pip push, but now guess what? They're stopped out. They're out of the play. So when the market goes all the way back up, right? I want you to ask yourself, what do you think it's going to want to do? It's going to want to pull back before going up. So these are things that you're going to learn about because, you know, that's just what the market does. It goes up and it goes down. It goes up and it goes down. And when you understand the characteristics of how some of these players move, something as simple like this is not, hey, I'm going to take this market all the way down. Something like this is you asking yourself, now that the market's breaking higher, right? Now that these low points are gradually going higher. Man, I'm giving you guys the keys today on US 30, right? But I should have literally watched this. Now we know what are we expecting for the market to pull back and go higher. That's just what the trend does, right? And we know, and this is why it's key to identify where the most recent low and the most recent high is, because this is not scary, right? This is an opportunity for you to see what the market wants to do, right? So this is just one of those plays that the market did what? Pulled back. Now it's probably going to want to go higher, you know. But important lesson to take away from this is understanding your trend, understanding that when you're looking at your trend, you're doing it on the bigger time frames, your 30, your 15, your hour, right? Let me show you what it's going to look like. And if you notice, look what just happened, right? This was the most recent low. This was the most recent high, right? Look what's casually happening. I don't know if you see it, right? It's casually happening. These low points are casually doing what? Going higher, as this market would have easily looked to go up. Now, if you're trading US 30 and you know that there's a specific time for every play, 9 o'clock was probably this candle right here, making its move on up, right? Trend, look at that. And if you understand what trend is, right, you already know that this play that just happened was exactly what we needed, the push to the upside. Why? Because since the market is trending, the trend is always our friend. There's going to be an opportunity that it does what? Breaks up, right? So that was actually another setup that we had over here where when we came in, we had some nice buys to push this market on up, right? So that's the trend. That's the trend. Let's hop on another chart, see what's going on. Let me bring up Euro USD. Right? It doesn't matter what market it is. Right? The first thing you always are doing is going into your bigger time frame, and this is a good example of ugly, choppy market. And this is why I want you guys to understand the characteristics of specific pairs, because as you can see, looking at EU, you can see it on the 1 hour, you can see it on the 4 hour. You know, compared to how it's been moving in the past, just imagine this was beautiful to the downside. Right now, it's literally consolidating. Right? But as it's consolidating, I just want you to also realize something that's happening. Right? And I'm just going to zoom in on it because this is important. You want to see what's happening as this market is moving. Right? I'm just interested at these highs and these lows. What's casually happening, right? We know consolidation, right? So we got to be very patient because this is actually a very good example of an ugly consolidated market. Right? You just got to stay away. Stay away. Like literally since the 30th of November, it's just been consolidating. No bueno, right? But what I would keep in mind is doing what? Understanding that at this point, the market went higher. When it pulled back, did it decide to go any lower? No. This is the next blow. Next thing you know, after that, the market decides to actually pull up higher, right? So these are actually important little things to see because in the example with EU, I'd actually look to take it higher. Why? Because slowly and steadily, let me just identify it so you guys can see what I'm talking about. This level, right, this high point, what happened? It broke through it, right? And these low points are casually going on up, right? So this is something that helps me just visualize what's happening in the market. But if we're looking at something like EU, the play I would look for is looking like, hey, I'm looking for supportive bounces off of these levels to go on up, right? And that's where you're able to minimize and find setups like this, where if we can get it something smooth, keep it easy. No, we don't even need it breaking lower, but we'll be looking for it to break on up higher, right? a little ugly, choppy setup, but just based on understanding the trend, it always helps you see what setup are you looking for, right? Like for example, this is going to probably happen with gold. Gold is slowly and steady what? Going on higher. These low points are gradually going on higher, right? So it's easily going to want to maybe take out that 1820 area right up in here, but then it'll probably want to drop all the way down to 1800, right? But you still got to understand that gold has already did that damage where it broke that high. So it has to, yes, come into this area, but before it comes into 1870, you got to realize, okay, if we are in an uptrend, right? The first thing I always ask myself is, what is the market reacting off of? What's creating this motion that it decided that, hey, it was coming down, and then next thing you know, it did something right here. This is that something, that strong wick, and decided, hey, I'm running away and I'm going up higher, right? Because you notice as it went higher, it was breaking, right? Look, this was casually going what? Lower, lower, lower. So you know you would have been looking for your sells. And then next thing you know, boom, it's breaking higher, right? So that's why we're looking at those golden opportunities to say, hey, let's push this bad boy on up. So like, for example, with me, what's the next thing I'd look for on something like gold? We already know that these low points are gradually going up. If the market could pull back now, and that's why I just had this whole area anywhere up in here, we'll be looking to take it up in there, right? It's just like, what trend are we in? First question. And once you're starting to see it, now you know there's only one good spot you want to come in at, right? You don't want to get in now, because if you get in now, you got to understand there's always risk associated. Risk to reward makes no sense right there. But if you can get in when the market does decide to pull back, have minimal risk, right? And take it up into these levels, you know, that's when the R to R makes sense. That's when, hey, you're winning more than you're losing, and you're finding the best place to get in rather than the worst, right? So if being able to identify a trend is very, very beneficial when you're looking at the charts. Let's see. If there's any specific currency pairs you guys want me to look at, we can definitely check it out. I know we had a few people mention what's next for US 30. So I just want to show you a good example of something very interesting that I found with US 30, right? And this was a good example of why this market was easily pushing on up into these highs, right? Let me show you what I'm talking about. Looking at this US 30, I want you to see that this market, we had these high points, right? These high points over here, right? And if you notice, what did the market do? It went up in there and broke and hit those high points, right? And most recently, the most recent high point that it hit was this move right here today, right? That it went up into this level. So right up in here. So if you notice, this was actually New York session. Right up in here where we had it move up. And this was just a quick boom, 100 pips, 100 points, keep it moving. As that market is moving up into these levels, you got to realize if it's going to make a reaction, it's going to react, right? If you're looking at this market, what is it doing? It's gradually going on up, right? The first thing, trend is always your friend. So if you notice with this US 30, right, when we are coming in already at this, this 930 candle, we were able to see it's starting to already kick on up, right? And as you can see, this was just a very basic play. Market literally pulls back, right? Retest that, and now we can kick on up, right? Grab your points, secure the bag. But I want you to notice what happens right after that, because now that it's swept, whenever the market decides to, hey, sweep or create a reaction, this is what's going to happen, right? So it's going to react, and then it should make a motion, right? That right there is a motion. I like that, because this is telling us that that this market has decided to break and be aggressive as it is to the downside, right? Now this right here was now finishing up New York session, But what this helps us see is just an opportunity now where, hey, this market that was going on up, right? Now we just got to see, hey, is this trying to break low, right? Even if that's just to a point before it decides to kick on up, right? Because what we got to realize, and this is what's really important, is you can't just go straight up and down, right? If you're looking at this chart right here, this is US 30, we have this low point, we have this low point, we have this low point, right? And they're gradually doing what? They're gradually going on up, right? And now it's like, hey, the market wanted to just retest this. You know, the market could easily, without a doubt, come down and decide, hey, we just want to be a little sketchy around this situation before going on up, right? We notice that it already has broken all of that rejection. So like seeing something like US 30, I wouldn't be afraid of this move because it's just a retracement, right? If you always start off and you ask yourself the first question, what trend am I in? And I guess this was a great conversation to have today because that's the first thing, literally the first thing you ask yourself, right? If you notice right here, like I was saying, looking at this pair, what happened? All of this was what? Rejection, right? So if you look at all of this, we should see that if the market does want to come here, it should serve as support. Has it gone into that level yet? Not yet, right? What this motion was just trapping everybody, right? Because as everybody's pushing it up, they're placing stops at the most wrong points when they should just be securing their bag, right? Because we already knew from the 26th when we had this session, let's push it on up, right? Now the market's saying, you know what? I got to retrace. I got to pull back. And this would be my sweet spot entry to just see it decide, hey, maybe I can kick in there. Matter of fact, I wouldn't mind seeing it come here, 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 and then at least give us some motion. And that's always something important. When you're looking at these charts, if you can find your R to R where it's making sense, right? Right? Let's just say hypothetically we get some nice, let's consolidate, we decide to push into this level, blah, 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 right? You always got to make sure that the R to R makes sense. This number right here, it has to be important, right? If you know where your risk is at and you know where your potential reward is at, it's always going to help you identify the setup even more, right? So I'm going to wait until tomorrow for some US 30 love, but the key thing to take away is, hey, grab your pair based on the right time that you're trading the market, go into your 1 hour time frame, right? And we're gonna see, hey, is it bullish? Is it bearish? Right? This was actually another choppy situation, right? A lot of choppy chop. But one thing we did need to see is, hey, we were dealing with that motion to wanting to take it up. So like seeing something like AU, we got to realize it just recently went higher. So these low points is where the market would want to before making its move. Just little stuff to keep in mind. Yeah, everything else is a little choppy today. In terms of Forex pairs, I would just be a little patient, you know, very patient actually. But this one's interesting. Let me show you guys something that's pretty interesting with this NZD Swiss. Right? If you already know, okay, this is the highest point the market's been. This is the next recent high. Boom. It's gradually going on down. Right? Seeing this, we already know this is the lowest point. So when we have an entry, we always know where the target is. We want to at least take it into the level. So looking at this market right now, we did get a sudden rush, a little bit aggressive, but if you notice, it's starting to be aggressive back to the downside, which is pretty interesting. So as it's going down, this is why I like is these high points are gradually going lower. These low points are gradually going lower, right? So if we can see NZD Swiss, as long as it stays under this motion, under this area, I'd look to take it into these levels to the downside, right? That would actually be pretty interesting. Not too bad at all. Oh, haha. Look at that. Enigma says the same thing, right? So that's actually a good setup. I do like. Pretty interesting in it. Pretty interested. We did get a nice setup from the 27th that would still be active. So if you notice, why do I like this setup on the bearish move? Because it's showing us a trending market. Now, as the market breaks below all of this support, right? As it breaks under that, all of that's now going to serve as the opportunity for us to continue to maximize and take it down into that low, right? You already saw the 3-to-1 setup, but you can literally turn a 3-to-1 into easily a 5-to-1, 4-to-1. Look at that, 5-to-1 on that bad boy. This is NZD Swiss. I do like that. I do like that as yes. Let me see how we're looking on the hour. Yeah, we just gotta wait for those breaks. Once we get those breaks, we will be gold. And if you notice, all of this right here, all of these breaks is all what? Structure, structure, structure. So if we can break through that, then we can go to the next level of structure that we have, right? And as long as the market stays under this level, then we know to take it down low. So that one would actually be a good setup to keep in mind. NZD Swiss, NZD Swiss. But if anybody has any questions, feel free, drop them in the chat. Definitely drop any questions you may have. Today we talked about trend analysis, just being able to see the trend in the market. It's really important. Don't sleep on it. Do not sleep on the trend, right? Like this is interesting stuff right now. Seeing that it's being a little bit more aggressive, we always ask ourselves, where's the highest point? Did it go higher? No. In fact, as it decides to turn around, what is it gradually doing? Well, it's actually going lower. Each one of these points are actually lower, 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 breaking through. So now my next question is, okay, these high points, is the market showing me that rejection, right? This was a pretty interesting motion. This was probably the sweep, right? But if that's the case, we already know right now, this instant, this moment with AUD Swiss, these are the highs we're talking about. As long as we can stay under that, we can target our next level of structure, right? If you notice, it's right there. If you notice, it's right there. And if you notice, we're dealing in it right now, right there. Right, so I'd be pretty patient, but I do like to see what this bad boy has in store. If you want, you can actually do something simple like this and just restrict that market. It looks like we might be just dealing in a little channel. So it's just a matter of seeing how it wants to react. But that's the sauce. That's the sauce for today. Definitely, please don't sleep on the trend. Right? I'm going to say that one more time. Please don't sleep on the trend. Por favor. And also remember, when the trend breaks, right, that rejection could possibly be supportive. And as long as that market is still going higher, don't think it's just going to sharply turn around. There's a reason why, right? So with that being said, family, I appreciate everybody on this call. It looks like some of the setups from Sunday were pretty smooth. I know we saw EJ that was smooth, GN with the push on up. It was a little choppy, but we were able to see the break off of this motion right here. But US 30 has been US 30. And then EG, yeah, remember we were looking at some shorts on EG. So definitely continue tapping into the charts. Remember, it's the last final days of December. So with that being said, we do have some NFTs, NFP this upcoming month for January. And then, of course, we're just starting our new year in the markets. So I appreciate everybody and have an amazing night. Take care, fam. Bitcoin. So we could talk about Bitcoin before we get off. And this one's just going to be a real simple, smooth run, right? Bitcoin's decided to make some pushes, some strides, right? Let's just see. And this is a good example of how the market moves. Looking at Bitcoin, you already can see in December and September, October 2022, it decides to go crazy, breaking 10,000, going on up all the way to what, 65K. Boom, right? And this is the area I'm talking about right here. Boom, 64 and some change. Based on the trend, right? Just based on the trend, we're seeing the markets going what? In an uptrend. Boom. Right? If you notice, this is what, that most recent low that we're talking about, right? If you notice, it's right there, right? Did it ever break lower? No. But as it's casually going on higher, what's expected for this bad boy to do? And AKA, it's called a pullback, right? It's called, hey, we actually broke up into this area trying to reach 70K, right? Trying to go crazy, but we broke that recent high, which is why this is why people get so emotionally attached to their funds, because at this point, when everybody's talking about Bitcoin going crazy to the moon, people are getting in, and next thing you know, it decides to what? Drop. And I'm talking about, look, it literally went from 66,000 to 47,000. That's 20K. That's probably almost a fourth. That's a little bit more over, you know. You got to be patient on that kind of stuff. So when it comes to Bitcoin, I definitely see, yeah, a bullish move, but you always got to understand the market still can come in and do some nice sweeps, right? Will it ever come to 25K, 27K? Listen, I'm no expert in the crypto market. I would always appreciate it because I would love to grab some more, especially at that price, because people are saying it's going, what, to the moon, right? But you always got to realize what I'm identifying is, as long as it's staying above these areas, we're still bullish, right? This is a very basic setup on a bullish buy. The only best thing to ask ourselves is, where can we get in, right? If you guys are familiar with Ray Dalio, he talks about one thing. One of the smartest strategies you can do is called cost averaging, right? And what that means is, rather than dumping all your money in right there, what you need to start doing when it comes to your crypto or investing in anything, right? He says, listen, if you're gradually getting in, right, you'll get one position there, right? When it pulls back, you're able to get a position here, right? Not putting all your money in as it's pulling back, you're positioning yourself, right? So even now that it turns up, you'll be what? Rather than now winning off of this move, you're up, you're up, you're up, right? And if you're familiar with just a little bit of your trade management, what you got to realize is these are the areas that the market would want to make a little nice reaction. These are the areas where, if you're noticing right now, we have some nice lows at, that if the market decides, it might just want to do what? Something as simple as wicks. Wicks. You see this wick? Here, let me just show you guys something, and this is where I'll finish my call. There's something we call a sweep. I know we talked about it. And we need to understand when that happens in the market. Because if you can see it eventually, it's probably this nice candle. Ever since the market did it, this candle right here, after, let me just, X marks the spot right there. Boom. After that, did it ever break lower? No. But it decided to take some people's money beforehand, and it decided to do it so swift that all it takes is a little wick. Right, family? So it's all about being patient, seeing it, identifying it, and then understanding if this is where the market's going to make its reaction off of. It's just a matter of time before it decides to what? React. And once it does that, guess what people are going to want to do? Get in, take it on higher. You see the play? You see the play? I'm showing you guys how to get ahead, right? And that's why it's like by the time people are talking about it, that's when the people who came in with the money is getting out of it. They're securing the bag so now they could come back and get more of it at these low points to take it on even higher to 75, 76, right? So talking Bitcoin and crypto, yes, I'm very bullish. I believe in it, right? I believe digital currency is going to take over. Already has, right? But you got to realize it's not going to 200K as fast as you think, right? It still needs to break that 70, 75K mark and then make a nice little retracement again, right? Something like this. It is how the market moves. So don't get ahead of yourself. Understand the best places to get in if you're going to buy something is at the lowest discounted price. But as long as you know the trend, that is your friend, you are one step ahead, right? So it would definitely get very fearful with Bitcoin if it actually decides to do this, which I doubt it will do, right? I'll probably just hold off at that 40K, 35K. But look at this, right? Because this was the last recent sweep we were talking about. 29K, 28K, sheesh Louise, right? Now it would be crazy if Bitcoin decides, hey, I'm gonna come in all the way low. No, that's not gonna happen, right? Hey, who knows? Fundamentals play another role in cryptocurrency, but I just want to show you on a technical level. On a technical level, this is what we're seeing: motion, pulling back, motion. Now we need to pull back to create motion. That's called an uptrend. Simple. Uh, all right, y'all. So I appreciate everybody on the call and have an amazing night. Take care.